Hey, Bulls and Bears, it is Sunday, November 6th, 2022. Thank you for coming back to the channel. We've got some news to get caught up on, and I do apologize. I did not put a report out yesterday, or Saturday, and we had some family activities that we were doing, and the things that I did this weekend really opened my eyes to how much more expensive things have gotten. First thing I noticed was we went to this taco shop, just a local Mexican food restaurant. Taco shop is what we call them. And for five of us, five's kind of a lot of people, 5-person family, right? 50 bucks, 50 bucks. Burritos were $11, right? And this was not Chipotle. This was not some fancy, not that Chipotle's fancy, but this was not some well-known place. This was just a independent um, food place, a Mexican restaurant. And these businesses are just getting crushed with inflation and the delivery of the food. Everything's costing more because the diesel, the cost of diesel. So anything that gets delivered to food and gets put on a shelf or served up at a restaurant, it's going to cost more to get it there. And the cost of living continuing to crush people's budgets. Employees are asking for more pay, and we see help wanted signs still in a lot of places, and businesses are being forced to pay more because the cost of living, and that's what employers are demanding, or employees are demanding out of employers. So it's interesting. The next thing I noticed was a game of bowling, and I see 4 of us bowled. We went out as a group, and it was $50 for 2 games, so about $25 a game. When you break it down, there's 4 people bowling, so about 25 out of 4 people. So what's that, about over $5 each, over $6 each actually. So that's, to me, that's kind of expensive. $6 for a game of bowling, right? $6 per person. And I don't bowl that much at all, so that's why it kind of shocked me. I think I hadn't been bowling in maybe a year or two. And just a couple things that I noticed here amongst my activities that really are like, wow, things are expensive. But let's get into the news today. Please let me know what you think down in the comments. Are those ridiculous prices? Bowling over $6 a person, and then the other one was $11 burrito. I think that's pretty expensive and pretty ridiculous. But here we go. The Dow Jones is the one that people talk about the most. Let's just go with that here. Dow Jones, from 28,800 at the end of September, hit 32,800 just about a week ago. And now we're starting to see a little bit more of a sell-off. We're down to 32,250 in that range. But it's interesting that we didn't pass the previous peak, which we saw was in August. And, the one we saw in August didn't pass the previous peak. Before that was in March. And March didn't surpass the previous peak that we saw, which was in January, right? So this is still a downward trajectory. Now, if the markets take off and eclipse that peak that we saw in mid-August, which was about 33,700, I will be very surprised. But I think this was a short squeeze, and I think this was a lot of people thinking that the bottom was in because the economic numbers, maybe they looked at the numbers and it looks good to them, like the low unemployment number, which doesn't factor in 100 million plus people out of the labor force. But short squeezing definitely part of it with the big the money men out there, the market makers. So I would play it safe still in the stock market. I'm not in the markets right now. I do some trading here and there, but not in the markets. I'm taking a wait and see approach. I think it's the best way to describe it. But a recent interview out of a billionaire, Sam Zell. We're going into a liquidity crisis, and we've talked about the term liquidity crisis, what that means, how that plays out. But let me just give you the definition here out of Investopedia. A liquidity crisis is a simultaneous increase in demand and decrease in supply of liquidity across financial institutions. At the root of a liquidity crisis are widespread maturity, mismatching amongst banks and other businesses, and a resulting lack of cash and other liquid assets when they're needed. Now, the lack of cash, I have to question that because we have a zero reserve requirement right now. So banks can loan out money, but that same money that they can loan out, can they use that to pay their obligations? That's the big question here. So we'll have to see how it plays out. I wouldn't be surprised if at any day we woke up and all these shenanigans, all this leverage just imploded. And it's just a matter of when. Now, I've often referred to this as a slow motion decline, slow motion collapse in the economy, and I think that's what it's going to continue to be. I don't think there's going to be any sudden implosion unless there's an outside blame, and that could be something massive like a war or a massive outage in power, what people would refer to as a black swan event. I just think that's how it's going to play out, and please let me know what you think about that down in the comments. Another thing too is that with the CPI number that we're seeing still elevated, which is still very low compared to reality, if you just factor in housing, just rents and the cost of living there, CPI should be much higher. But even the number that they look at and that they use cherry pick data is still high enough to where we're going to see more rate increases. All right, now let's talk about an area of deflation here. This is an interesting one in my opinion here. Morgan Stanley put this out. Prices for Rolex, Patek Philippe, and Audemars Piguet watches. I'm probably not saying those right. I'm not a big fan of luxury watches. Will keep plunging due to flood of supply. So when there was this and just inflation everywhere, a lot of people wanted to park their money somewhere, anywhere besides sitting in a checking account earning nothing or very little. And people went out and bought a lot of luxury items. They rode the wave of inflation, and we did see rising prices of pretty much everything under the sun, including luxury watches. And now we're seeing a flood of supply of watches. Isn't that interesting how when people go to park their cash somewhere or put it in something besides just cash, we see this FOMO. Everybody wants in. Same in the housing market. Everybody wants in. Nobody wants to miss out on the rising prices. They feel like they're losing out if they don't invest in something. So it's part FOMO, which is fear of missing out, but it's also part of just being scared that what if these prices never stop? And like we see in other countries like Venezuela, Zimbabwe, and many others, where inflation did never stop and ended up in hyperinflation, and their entire economies were just collapsed, and people are buried under massive debt and high cost of living. Well, with the world reserve currency, we always said here we don't think that's going to be the case. That we don't think hyperinflation is going to ensue. And now, of course, the Fed raising rates is helping to make sure that doesn't happen. Although inflation is still high because we still don't have enough manufacturing, and we still have shortages and things like that that are going to continue to weigh heavy, I think, on the middle class, on the average working person. But that's what it is. Rolex watches, luxury watches now coming down in price, and a lot of supply on the market. So maybe that's going to be pretty similar to the housing market. All right. We'll have to see. Now let's talk about layoffs. Of course, most people know, I think everybody knows about the layoffs at Twitter and in the tech industry altogether. Twitter, of course, we know Elon Musk came in, bought the company, laid off a lot of people. Some people said that's awful. He's an awful, rotten person, for doing that. Other people say that's business. Companies restructure, they consolidate, and they make arrangements. They do cost cutting. They make arrangements to save money. And if you have a bunch of unnecessary workers, that's part of it. Is he just being mean and firing people unnecessarily? I don't know, but it is pretty massive, though. The number of people being laid off, it's amazing that Twitter needed this many people. If a new owner comes in and says that this many people are not needed, how did the company run? How will the company run without them? And that's one of the questions. The other question is, why would the previous owner keep so many people there that were not necessary, right? So it makes you scratch your head. It makes you wonder a little bit, like, what is he doing? Like, what type of restructuring is he doing? Because that is just massive. But more on the tech side of things here, Meta platforms, Mark Zuckerberg, thousands of layoffs. So the tech industry is still getting pummeled. Now, a lot of the media outlets, business news networks, were talking about this. Facebook planting major layoffs this coming week. Now, when you listen to how many people they piled in to this Meta platform here, Meta employed 87,300 people at the end of September, and that was up 28% over just a year prior. So they surged in their number of employees by 28% in a year. That's some pretty big growth. They had some pretty big expectations for that. Meta platform stock now down close to $90. And Facebook's losing a lot of people to other platforms. Now, Meta, the stock there, that's over Facebook was about $370 in August 2021. Remember, that was the peak. That was during the lockdowns. Everyone was online. People were at home still a lot of times, and now down to $90. Just wow, obliterated. Some investors lost a lot of money there. Finally, let's talk about Airbnb. The Airbnb bubble is bursting. Now, here's an interesting statistic that I read. Over 50% of all short-term rentals that are around right now that are used as rentals, short-term rentals like weekend vacation rentals, etc. Though 50% of all those were sold in the past 2 years since the health crisis, and now they're seeing more vacancies at Airbnb. Here's an article here out of Wired. Is this the end of Airbnb? They're seriously asking that question. Hosts are calling it the Airbnb apocalypse. But this is something that happens. First, there's the mania. We had the lockdowns. People were inside their house for a long time. 2021 was a year of travel. People went out and stretched their legs again, took a lot of vacations, did a lot of driving, did a lot of trips, took a lot of trips. And now these people that bought these Airbnbs, a lot of inexperienced property owners bought these, and they found out the hard way that the cost of cleaning, a lot of people that own these don't have time or don't want to clean them themselves after a person leaves or after a tenant leaves. And the cost of cleaning and the cost of upkeep, maintenance, taxes, all that stuff is hitting a lot of these people in the pocketbook. And now with more vacancies, and it's becoming a trend now that hotels are now becoming cheaper than Airbnb. It used to be that Airbnb was the cheaper alternative, and hotels, were having a hard time for a minute, but now they're finding out the hard way. So Airbnb Bust. There's a Wired article here, and I thought it was pretty interesting because 50% of all short-term rentals bought in the past 2 years. That's a huge part of the market, and if this adds to the other weakness that we're already seeing in the real estate sector, we could see a lot of supply come on the market very, very soon, and put further downward pressure on prices. Now, what I'm afraid of is some sort of bailout where all these Airbnb owners get a bunch of free money. I hope that doesn't happen. I hope markets are allowed to correct. As you know, I prefer zero to little intervention in the markets, because that way we can actually see the real value of something, the real worth of something. And with so much 0% interest rates, so much easy money, all this stuff going on, all these shenanigans, all these bailouts, too big to fail. It's just creating chaos and a mess. So I hope we'll see some more corrections going down the road, but I hope everybody liked this report. What do you think about the $11 burritos and the $6 plus game of bowling? That's just what I'm seeing here in San Diego. Where is it at? Where you're at, what's it like? Is it that bad? Please let me know, but thanks everybody for being here. We'll talk to you very soon. We'll be back shortly with another update. Talk to you very soon. Bye for now.